A new low-cost ETF is now trading on the ASX, opening fresh opportunities for Australian investors. Joining me now is Marc Jocum from Global X ETFs. Marc, so great to have you on this show. Can you give us a quick overview of the A300 ETF launch?
Sure, thanks for having me, Nathan, on the show. And for most people, they wouldn't have seen a new broad low-cost ETF in the last 7 years. But that's exactly what we brought to market. We bought the Global X Australia 300 ETF. The ticker code for that is A300. It's now trading on the ASX and gives you exposure to 300 companies of the largest companies listed on the Australian share market. And we're doing it at a fraction of the cost of what typical active managers charge. We're charging just 0.04%. So if you want to invest $1,000, that's $4 in management fees that you pay every year. Super low cost and gives a really nice diverse exposure across the main market in Australia. So we're really excited to bring that to market.
Great. Does sound very exciting, Marc. But what does this mean for Aussie investors? Tell us a little bit more.
For Aussie investors, a lot of them are still stock picking, right? And we're now in the midst of earnings season, and there's sometimes a lot of volatility within stocks. But a lot of the time, the vast evidence shows that there's only a small handful of companies that generate the majority of returns when it comes to the share market overall. So if you're able to pick those individual stocks, maybe you might be okay at potentially outperforming. But for the vast majority of investors here in Australia, I feel that they can really control for a few things, being the fees that they pay, and hence ETFs make a good decision for that, and then their own behavior. And instead of following market news, it might make sense to be in a low-cost, broadly diversified group of companies, and that's what A300 does. We're bringing access to one of the prime benchmarks when you're looking at the top 300 companies in Australia, and we're doing it in a low-cost wrapper that's tax-efficient, liquid, and transparent.
Amazing. And where do you see the opportunities in the current market for this ETF?
So for us, it's really being more relevant to more portfolios. A lot of money is going into low-cost, broad-based Australian equities. If you look over the last 3 years, we've seen over $20 billion going into this category. And it just tells me that for clients looking to build robust and diversified portfolios, this really sits as a core holding. You can have some fringes and satellite exposures by chasing things like types of thematics, commodities, or looking at something different. But considering one of the hardest things for active managers to do in the form of broad-based benchmark, this provides that platform. So if anyone paying over 1% in fees per year to an active manager, this really is a bit of a groundbreaking solution to be able to pay a low-cost management fee for an ETF that gives you exposure to not just the large cap of town, and we know that the Australian banks are trading at some of the most expensive valuations globally. So for people who also want to experience more of the mid and small cap companies, getting that broader diversification to the broader 300 rather than the 200, which a lot of people are used to, this could make a really good core allocation to portfolios as that diverse holding base.
Great. Marc, I love the energy you're bringing today. Let's talk about any future trends we could predict maybe in the next 6 months with this ETF.
So like I said, we are on track this year to be the record-breaking year for ETF market flows. 2024, last year, was a record of 31 billion. I think we're going to absolutely blow past that, and we're going to hit closer to 40 to 50 billion. Considering about 20% of flows are going into this category around low-cost Australian shares, there's potential for this product to be a really groundbreaking product, to be one of the fastest in our suite that we've ever had. So for me, I definitely see more people allocating to Australian shares. Yes, some people might be a little bit more tactical as how they allocate, but for the vast majority of people who are just allocating to a broad-based, diversified fund, having this as that core while they experience with different types of strategies on the fringes, whether you're looking at global shares, then we've introduced a global at a reasonable price ETF in GARP. We've also got commodities ETFs for people looking at accessing things like gold or even artificial intelligence like GXAI, getting exposure to leading AI companies. This A300 ETF really forms our foundational pillar of portfolios. So for me, there's going to be continued money going into ETFs, particularly low-cost ETFs, because that's where two-thirds of fund flows do go into. So this could be a positioning for one of the most successful ETF launches we've ever had.
Fantastic. And what kind of investor do you think this ETF will appeal to the most?
It's a good question, Nathan. I think it's going to appeal to a broad range of investors. So for one, you've just got your everyday retail investor who's looking to get into the market, not 100% sure how to invest. ETFs fill that bucket quite nicely. A lot of financial advisors who are looking to build model portfolios for their clients, they're obviously trying to bring the fee down for their clients, particularly in a very compliance and regulatory driven world. So that could be a nice model portfolio allocation at the base for your Australian equities. And I think, like I said as well, for a lot of asset consultants or even some of the bigger players in town who are using active management and who might need to have a bit of a placeholder whilst they might find a replica active management, even though the evidence shows active managers fail to outperform the broad benchmark, this could fit quite nicely there. We do have a lot of super funds who performance test against the top 300 rather than 200. So there really is a broad range of applicable investors for a product like A300.
Amazing. Sounds very, very appealing to all those investors, Mark. Thank you so much for joining us right here on Ticker. Marc Jocum from Global X ETFs. Thank you so much.
Thanks for having me, Nathan.